Yo, 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 good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. What's everybody doing this morning? We do have a shortened week. We haven't really seen much volatility this week. We did see a nice upper move yesterday on the day. We are currently watching the yearly opening range, seeing what kind of action we get. One thing is certain, I don't really like what I'm seeing transpire here on the USD JPY or on the dollar, as this right here is going to be that yearly opening range. No, I'm lying. This will be. So we always mark that yellow. I always do it just simply because yearly and yellow is the same letter. All right, so yellow line marks yearly opens typically on my charts. And basically, a yearly opening level could be in play for as far into as far as up to quarter two. We would like to typically see price have the opposite reaction, but what we could see is we could see a liquidation to the upside here. But you can clearly see that today is Thursday, and on the weekly range, you have already definitely smoked last week's high. You're currently moving up into December 19th's weekly candles high right now. So I don't think, well, I mean, you have already decapitated it. So it's already been done. So essentially what we're doing here is we're looking for potential trading opportunity. We are watching, as of right now, this level right here that is marked old daily support. 16,777 is the exact price. That is just an old daily support. So right there, you can see that candle. It is Friday, December the 23rd's closing price. That is the price we're looking at. You can see clearly that it was support. Once it was set here, you did get an inflection move off of it. You did push higher. You did take out resistance here, and then you had a bearish engulfing. So it cemented this into a trap. So until we take out the high of this stuff right in here and get, bullishness, this is looking like a short setup, unfortunately. But as long as we're above this, we're not going to be bearish. So I can't be looking to take the short setup here because I'm currently long from the yearly opening range. So yeah. A little bit going on. This daily candle does not look that bad just yet as far as range wise. I do not like the fact that we did liquidate this stuff here, closed back above the supply with this candle, closed back above the supply level, and still getting a bearish reaction. That typically would look bullish to me, and today could just be a pullback day. So even if we don't get an opportunity for a trade this morning, which I have already essentially taken the trade, but since I was already long from the yearly open, all it did was just move. It just averaged me higher on the cost basis. So I'm not my entry is not up here. My entry is essentially lower. And I do have the stop setting above that. That put me in at 16,695. 16,695. So right there, right in here is where my entry is now. And that's on the smaller account. I didn't want to ruin the position on the other accounts, obviously, because they have more money on them, but it is what it is. This is that second weekly high. You can see how you are kind of getting a slight reaction here. We've been trading at the price 104.93 for 20 minutes now. So we're just kind of, just kind of biding our time. We got 15 minutes until the open. There hasn't been anything like extraordinarily bearish news-wise. But the technicals doesn't look great. Let me show you what I mean. Your range is getting tighter, but your bounces are not getting higher, right? So since we put in this swing high, had a bounce, this swing high is lower. That's, people are loading up on shorts, expecting lower highs and then a drop. So we'll see how it ends up playing out. We have been in a range. Labor data. Fans rate hike fears. What do you mean? Of course, there's going to continue to be rate hikes. Yeah, jobs numbers must be. Let's see if we can pull that up on Forex Factory, because I'm not familiar with this website, so it's going to take me a minute to figure it out. So I guess red envelopes mean it's high impact. I don't understand why it's got the currency. See, to me, Daily FX's calendar is just so much easier to read, but I don't know if I'm being attacked with a phishing attempt or what's going on when I go onto that website. So I stopped doing it because I am not about to. I don't click links. I don't click stuff that I don't know what it is. It's just the best way to stay out of trouble, in my opinion. The reason I'm not sweating or, in fear of this rolling over is we do have daily support here at 38.23 on the futures, on the S&P 500 futures. So if we start to break down and get, see some real bearish momentum there, then I will start to close this position. But we are taking the long essentially based on this old daily support here. For anybody just popping into the chat, what's up, chat? Good morning, everybody. But you could clearly see support. There's the breakdown. On this day, you retested it at that exact price. It held as support. You got another impulse wave correction, impulse correction, correction, correction on these 2 days right here. Tested, resistance, resistance, break, close above. This is the first retest of it. So we're looking for a bounce here. This was Tony the Fish called this out in the live stream that we did yesterday morning inside of the Discord. That is why I have at Tony the Fish's name there, because I wasn't even paying attention to this price. I let my focus be on the yearly open. I wasn't even paying attention to that. I knew, that there's a weekly level in there too. Weekly res up there. So let's mark that weekly res with a WR. That just tells us that is weekly resistance. And basically my answer, he asked me would I potentially get long here. My answer to him was no, because weekly res is right there. But the more I looked at it, the more I was like, we could actually. So, yeah, I wasn't even thinking about it until he mentioned it. So we're currently long Profit taking area would be 16,829. Intraday resistance right there. So if you did take this push down into this support, this is your profit target. Naturally, stop is low of day. This push lower cleared out low of day. Right there was your low of day. Well, no, that's yesterday's low. Sorry. This low, this did make a fresh daily low. I did look at it on the indicator here. So this is the low, current low. This was the low of day. This was the low of day. So you have been trending in a direction lower, but you can clearly see how tight today's range is compared to yesterday. You are trading as an inside day. Inside day just means you're choppy. A trending candle is when you take out one side or the other side of the previous day's range. Yesterday was a trending candle to the upside. We would love to see today be another trending candle to the upside. It's been a long time since we've traded above 17 grand. That's kind of where we are this morning. So if you're new here, welcome. If you are not, welcome back. Thank you guys so much for being here. Thank you for your time. So let's get this one back over on the 5-minute time frame. We can see what's going on here. By me doing what I did, like I said, it doesn't put me in right here. So I have a little bit of breathing room. But it does realize any profits that I had, and then it just pushes my position up. So now that means that it doesn't bank the P&L. It just moves it up with the position, if that makes sense to you. But it redeploys capital from where I took profits already on the position. It redeploys a full-size position with those realized gains. All right. Good morning. Good morning. Thoughts on the yearly bearish engulfing on Bitcoin? Clipper, there is not a yearly bearish engulfing on Bitcoin. I've been seeing this theme across Twitter, but obviously it's just ignorance. People don't understand what a bearish engulfing is. Now you're going to have a lot of people say that you don't pay attention to the wick, but I disagree. In order for this to be a bearish engulfing, you must take out the high of the previous candle. The body does not matter. It's the whole range, not just the body. All right? Not just the body. You must take out the high. I will show you what an engulfing looks like. An engulfing is just another word for outside candle. This is an engulfing. You take out the high of the previous candle and the low. And then you close lower, right? That's an engulfing. This is a perfect example of an engulfing. Right there. Move up, take out the high of the previous candle, close lower. This is your beautiful, perfect outside hourly or engulfing candle. It is a terrible looking candle. It is, but does that mean that this is a signal for a trade today? No, absolutely not. Does it scream weakness? Of course it does. We have not seen one single quarter post any positive growth on Bitcoin this year. Or last year, sorry. Because we're on a new year. This is 2023, baby. S&P 500 pushing lower down into daily support. So obviously the jobs number, whatever jobs number came out, tomorrow is NFP, non-farm payrolls. Tomorrow is the important number, but there is obviously another number that came out that the S&P 500 is currently not liking. But remember, daily support, we'll see if it holds. If it doesn't, then this will likely be sold into. If you are right now looking for shorts on Bitcoin, your entry should have been anywhere inside of this candle's range. Right there, for instance, would have been a decent spot for a short entry. There was a short trade on Euro. How can I do this? Let me screenshot it. Right there, today at 7:35 a.m. This is out of the Discord. Euro USD on the daily time frame. I can't make it bigger. It won't blow up the picture. I can just do this though. There. You can see how we were trading above resistance on the euro. And then I said that right here, 7:35 a.m. You were green on the day when I made the call out. Green on the day when I made the call out. And you would have known where to take the entry. Don't know what all that is. Right here. Daily resistance. So when I called that out, we were trading above this. You run over here in 515 or 1700 hours, which is right there. That's your daily open. At 8 o'clock, so 30 minutes after I made the call. I made the call on this candle. That euro looked like it was going to go lower. Right there would have been a good place to take short entry. Down. All right. So we're not really loving the Bitcoin long today. I also brought that up inside the Discord. I'm not trying to shill the Discord. I'm simply letting you guys on the public side know where we stand. Because the people in the Discord already know what I'm thinking, what I'm looking at, and what I'm thinking. Because I come to the desk at 6 o'clock in the morning. I look around the market. I have a little look-see of what the talking heads are discussing and stuff like that. And then I basically look for plays. Once I have or see a play or two, or whatever, if there is no play, whatever is going to happen for the day, I let them know. The reason I started coming, see, like, it doesn't matter to me. I can go live at 6 a.m. I used to go live at freaking 5 o'clock in the morning, but I can go live at whatever time you guys want. I typically try to go live around 9 a.m. because it gives me 30 minutes to discuss what we're looking at and a little bit of time before the New York session opens for the stock market. The stock market open is typically when we want to be live. Would I buy the Euro USD right now? No. The trade on Euro USD was just a bounce trade off of this violent move lower. This happened on the open, the very first day of the year. This move occurred. So that's why we were looking at all of this. Notice how you did not liquidate that swing high before you bounced. Before you left the area is what I mean when I say bounce. Right there. That high is still intact. You did not take it out, and you still rolled over. Now that tells me, there's quite a bit of momentum inside of there. Now that does not technically mean that that Bitcoin's going to roll over. All right, because the Bitcoin doesn't trade with the euro. But what that does tell us is that if we're looking for long positions on Bitcoin, the dollar is strong today. And we don't typically want to be looking for long plays on Bitcoin when we have a strong dollar. Because Bitcoin is traded against the dollar. Excuse me. Film Garden, you can go on Daily FX. No, I cannot. I'll show you why. Boom. You see this right here? Every time I go on this, I get this pop-up prompt. I have reached out to them to ask them if this is legit or is this a phishing attempt. I know these people, and half of their employees are indeed in New York City. So why would it say not intended for residents of the United States? Also, content on this site is not a solicitation to trade or open an account with any U.S.-based brokerage or trading firm. Daily FX is provided by IG. IG is a broker or firm. By selecting the box, you are confirming that you are not a resident of the United States. I am a resident of the United States, so I am not clicking that. Secondly, if this is a phishing attempt, just by me clicking that could give hackers access to my PC. And I am not doing that either. So until that no longer pops up, I am not messing with Daily FX. Call it paranoia, call it whatever you want. Right? I have a VPN, but I try to leave my VPN on in America. You know what I mean? So that way, because I'm not trying to do anything illegal. You know what I'm saying? But Daily FX is just a news outlet. But I have reached out to them and I've gotten not one response. So maybe they are no longer maybe they are no longer a part of IG. Maybe not. Maybe IG is no longer in business. I don't know what's going on, but either way, I'm not clicking that. Try opening Daily FX on a incognito tab or another browser. I can do that. Boom. This is Firefox. So I don't know what's going on. I wish I did, because it was my favorite website for news. And I like their outlooks and their takes. They give really based takes, really good advice. They're they're not the best in the world as far as their trading advice, but because they use the old standard, a lot of them use the old standard technical analysis, the cup and handles and all that stuff. And we are a little bit more advanced than that over here. Great explanation. Cheers. You are welcome, my friend. S&P 500 looks like it's breaking down. Yeah, there's only 3 kinds of candlesticks. Let me see. Let me go over here to this monitor. Excuse me, man. I am sick. I apologize. I'm not sick, but I have a cold or whatnot. I have a video on this. Right here. Apologies on the sound quality. Obviously, I didn't have a great microphone when I made this video, but this video goes over what you should be doing, how you should be looking at candlesticks, and how you should approach them. But I'll briefly go over them. There is only 3 kinds of candles. Only 3. There's only 3 things that candles do. You either trend, you are either inside or you are outside. An outside is just a bearish or bullish engulf. So like when you're a trend trader, typically what you want to see is you want to see your daily candles trending. By trending, I mean going, this is an outside day candle right here. You can see this daily box. That's your entire daily range here. Notice how you took out the high of this day with all this. Then you also took out the low. Boom, boom, outside. So typically when that occurs, whichever direction it closes, that's typically the direction we look for the market to continue. It doesn't always happen though. Then the very next day, which was yesterday, traded as an inside day. So this is an inside choppy day. Today you were trading inside of this day. So you were an inside day candle. Now that you've went down to the low here, if you do not reverse and become bullish, then we will be looking for downside trades moving forward on the S&P 500 for those intraday trades. It just kind of helps you with your daily bias. Each and every day when I come to the market, you should have a way of identifying trend at least the last 3 days. And since we do not have a trend the last 3 days on the S&P 500, it makes it more difficult in lining up those entries. And what we strive to do in this channel is to take the most highest probable entry. So we can book gains to our P&L. I really like to see a video, not a stream, of your morning trading routine with just you saying your thoughts out loud. That's basically what we did yesterday. That's all I'm doing, really. You're just watching me look at the charts, and occasionally there are questions. I answer them. We do have a little tiny demand zone here, but I don't expect that to be anything. It is daily support. So this is an ascending wedge, if you will. So people were looking for the breakdown, and you have broken down. Well, not of that little bit of a trend, but you did break down out of this wedging formation. No, I mean, if you put it up there, you did. You got something like that, right? And people are just outright bearish. Euro is traded like a risk on currency, right? That's why we pay attention to the euro, mostly because it's inverse to the dollar. If the dollar's getting a really strong bid at the beginning of the year, that's typically not what we want to see. But it does not mean that the dollar will be bullish for the rest of the year. Because the whole first quarter could just be a fake out move. We discussed this yesterday with the USD CAD. So the market is open. We've been open for 10 minutes, and you are getting a lower push here after making a low of day. So it does look like the market is looking for that downside trend. Yeah, the lower it pushes, the worse it's going to look. As far as, bearishness. See, here's another thing too. Look at your daily point of controls. These little red lines here, this one's higher. This one matches this one. Then you migrate higher. Then you migrate higher. So we would want to see price migrating higher with the point of control if the buyers were in control of the market. If this order flow was bullish, it's not. Not for the last 3 days. You're bearish. And the way to capitalize on that would have been to take that Euro USD short. So is a trade going to present itself today? Well, the trade would have been a short. But not on Bitcoin. So Bitcoin hasn't got near the volatility or the size of the push as the S&P. Bitcoin is still trading inside of yesterday's range. So Bitcoin is still chopping around. But if the S&P 500 continues to trade lower, then we're probably going to be looking for sells on the Bitcoin. But right now, let's give it a minute here, because this aggressive move up on the dollar could be a selling opportunity. Daily res right there. If we get above daily resistance on a close, then this is going to be our upside target on the dollar. 105,249. And then ultimately, see, you can trade all the way up the 105.69 on the dollar and still look extremely bearish. Anything above 105.69, then you start to look more bullish. This starts to look like a pullback. As of right now, it looks blow-offy to me. So what I'm saying is, ultimately under 105.69, this higher move up could be a buying opportunity. So this could just be a pullback. We were looking for the euro to have a pullback. Remember, everything is playing out just as expected and discussed. If the sellers have the same conviction next week as they did this week, my two favorite pairs for USD DXY strength. So looking for shorts. NZD USD, Euro USD, both good pairs to hedge dollar short positions. So you would want to get short both these. December 17th. What is this day? Right there. December 19th. So on December 17th, I said to look for shorts. What is that line I have up there? Weekly resistance. The first trading day after I made the post, Monday, December the 19th, you could have taken a short trade on that. And this is where you would be right now, had you. So we were just looking for a pullback. These were our two favorite ones for that pullback. And to me, this doesn't look like a heavy selling pressure. This looks like a pullback. So we're not out of the woods for Bitcoin longs for 2023. Not yet, not even close. We get above 105,697, then we'll start to talk. Just above it's fine. Actually, just above it would be the better short entry. So then you have to start asking yourself, when would you close that bullish position or that bearish position on the NZD? Well, as of right now, you would definitely want to be taking profits because you liquidated last month's low. At any time now, this thing could find support. The next liquidation point is all the way down there on a monthly basis. There are weekly liquidations that can happen, each low, of course. But as far as monthly liquidations goes, if you did indeed take the short on NZD, you might want to think about starting to sew that up. Take profits. Because this could be where the NZD USD finds support. Look where you are on the weekly. Just keep an eye on your longer term time frames, your higher time frames, as they'll keep you in line with in more intraday plays as well. I got long yesterday, euro. Or this day, not yesterday. On this day, for just the bounce, that position is still open. It hasn't been stopped out yet, but if it continues lower, like down to the, because I almost bottom ticked it. So if it gets down to like roughly 105, 279, it will close the position. But I wasn't looking for bullish continuation. I was only looking for a bounce. That looks bad, right? Doesn't look great at all. It is almost an engulfing downside weekly. You liquidated 2 weeks worth of price action in one. Not great. Not great at all. That's quite a bit of expansion to happen, first day of the year, right? But a lot of people are adjusting portfolios, taking new positions, setting new entries, all that jazz. Perhaps it's because IG is a CFD provider and CFD is banned in the US. IG is a US broker. It's just like Oanda, right? Oanda has CFDs as well. They don't offer them to the US clientele, US citizens. But IG is also in other countries. It's not just a USD brokerage. So I don't know what's going on there. It really sucks. Chase says my vote is 9 a.m. Yeah, we're probably going to stay doing it at 9. It's good for me too. XRP and Doge, please. Yeah, well, let's take a look at them. XRP's into daily support. I don't know what happened here. Other than a whole lot of people got liquidated. You remember all that good news that happened about the trial? All those people that have been bullish XRP based on that, they're dunzos with that wick. That wick liquidated as far back in time as July. So the lows that you made in June, they're still intact, but anybody that got long in all of this hype, they are done with that. With that right there. So I don't know. I mean, I'm not a fan of it because, like, simply because Coinbase doesn't even list them. We can't even trade them on Coinbase. So if the US won't allow me to trade it, I don't like it right off the bat. But it's at a potential daily support. Is this a bullish candle? Yeah, it is. But does this indicate upward pressure? No, it doesn't. In fact, this is your new bearish target. But if you hold the line here at 34,025, then you can look and target resistance. 34,794. So if you don't close below this on a daily closing basis, this is my upside target. I wouldn't take it today because your momentum is bearish. So give this a day or two to wane or to ease up. Like maybe tomorrow you have a small inside day because you're coming into the weekend. I doubt you have a small inside day tomorrow though because it's an FP, but if you do, then see if wherever today closes holds. And that only matters if, of course, today doesn't close under 33,916. Sorry, 33,916. That's support. So we'll see if we do get a support hold or not. There's nothing else stopping this thing from going lower today. That's intraday support. There is no daily support. There's a 4-hour support down there, though. Next daily support is all the way down there. But I have more of a bullish bias, even though this thing is moving lower today, even though so far on the dollar you've been very strong. I still have a bearish bias the dollar and a bullish bias this. We're just waiting for a beautiful opportunity, which may be getting on Bitcoin. The XRP's at support. And what was your other one? Doge. We crucified that one as well. I mean, this thing was trading at 75 cents and during the hype when, everybody was going ape shit over cryptocurrencies. The bull market's top end cycle, the very top of the market. Now you're trading at 7 cents. If Bitcoin catches a bid, a lot of your alts will too. But Bitcoin must catch that bid. As of right now, you are trending lower. Have you found and made support on Doge? It's possible. If you get under 6808, I'd leave it alone. That's also going to be pretty damn close to daily support. But if you are looking for bullish opportunities on Doge, the first area to look would be 7255. We have a bullish engulfing on the hourly, which is a beautiful sign. If we could get it a little bit higher, it'll make this breakdown a trap or a potential trap. I don't care too much for the hourly traps. But since we took the long trade this morning, we would like to see it continue to the upside. You did take out the highs, so I mean, that is, you have made a bullish engulfing. You got 21 seconds on the close. That's a good looking, that looks good. I will, Big Blue. I will try Forex Factory's calendar. It's just going to take me a little bit of time to get used to the platform. Film Garden. All I do when I approach when I sit down is first and foremost, I make sure there is no massive major thing happening overnight while I was asleep. I look at the charts. Very first thing. First thing my eyes lay on is a Bitcoin chart when I move the mouse or when I wake my computer up, right? First thing that pops up is this chart right here. I usually have SPX. I usually have Euro. I usually have Bitcoin up. I'm just getting a broader outlook on the market. Then I'll go check the bonds, see how they're doing, see what they look like. Are they up? Are they down? What's the percent change on the day? You know what I'm saying? Then I look for any major headline news. Like, for instance, Russia launched a nuclear warhead towards the U.S. I'm joking, obviously, but any massive news event that could make price do something. At that point, like most of the time when you do get the news headlines or any important news, you're already going to see that in the charts. You're already going to see that in the charts. You're already going to see a big, massive candle to the downside or a big, massive candle to the upside. So then at that point, I start searching around other markets, other Forex pairs for opportunities, because there's not always a trade to take on Bitcoin. If Bitcoin is trading at the high of day or at the low of day, I can't necessarily be looking for an opportunity on Bitcoin now, can I? Unless I am expecting a reversal. The only time I would expect a reversal is on an inside day or when you take out the low of the previous day. But we've had a bullish bias on Bitcoin all week. So when we have a bullish bias and price is letting us know that that bias has been correct, then we continue to look for that. Tony the Fish found this line yesterday. And yesterday I told him, the trade might not be today, it might be tomorrow or the next day. We got to see how today closes. It does look like this trade is shaping out to be a decent one. So many people bearish got smoked just now, probably. And they got bearish because of this right here. This scares people, not us. Not us. Not many people would have bought that. That's a breakdown below support. Most people would be selling that. They would be wrong. They would be stuck. And I love to see the market make people get stuck, because when the market gets people stuck, you can typically see a rapid advance in the opposite direction. I had some spare time and looked at Heath's playlist and watched the beginner's video again, picked up a few things I've missed before. Yeah, the playlist is a good one. I know what you mean, but I don't know how much learning would happen, really. People learn, in my opinion, let me just say like this. For me, I always learned better when I could ask questions. When it was with trading, I didn't really have anybody to ask questions to. I wish I did. You know what I'm saying? But I just didn't. There is nobody out there, really, that was providing questions. I asked one guy a question once, and the first thing he asked me back was, "Are you part of the paid mentorship group?" My answer to him was no, and he never answered my question. He ignored me as if I was chump change. And I wasn't, I was already a decent trader at that time. I was just asking him what one of his quote made up terms was. I was just trying to see like what he meant by what he said, right? Because a lot of YouTubers will talk in that manner. They'll use terms like um, order order box window pane or some crazy word, and you're like, what is that? I've never heard that. He must be smart. He must be good. When in reality, it's just the same thing that everybody else has already known about since the 60s. He just called it something different so he could market his product better. There's a lot of them out there with made up bullshit terms. You know what I'm saying? First and foremost, you can't you can't make up a term that happens inside of price action and make it mean anything, because nobody knows what price is ever going to do. So you can't like really define a specific term. And I especially love the YouTubers that act like they know what price is going to do, because their system is what the market does. You know what I'm talking about? When they're like, this is why I'm so good, because my system works so much, because that's what the market's doing. Well, then why do you use stops? You know what I mean? Like, you should know exactly what's going to happen since the market's doing what you said it's going to do. Nobody knows. You won't find many people taking straight live trades like us either. You won't find many people taking straight live trades like us. You'll find people talking about them, trades they took, or doing a rehash video of why they took the trade. But you won't find many channels of live trades actually being placed while the market is live, like we do. Because they are afraid of getting it wrong. The more times they get something wrong, the less credibility they get. Doge, if Bitcoin continues to move higher, expect the same. Expect it to move higher. If Bitcoin starts to get killed again, expect the same. Expect Doge to get killed again. I'm very curious, what is your average monthly return percentage? You know that changes, right? Do you want me to average that on a 2-month period, on a 4-month period, on an 8-month period, on a yearly basis, on a 2-year basis? While I'm at it, how about I give you my social security number, my home address, and my PIN number to my debit cards? I'm just messing with you, Danny. That changes, right? It changes. But if you're asking what is a good target for you to look for on a monthly return basis, I would say 8%. If you could do 8% per month, you would absolutely be one of the best traders in the entire world. I know that doesn't sound like much, but most people don't make money on a year-over-year basis. Most retail traders don't make money on a month-over-month basis. So if you could just average 4% month over month for the rest of your life, you will be richer than you can even imagine, because you will be outperforming the S&P 500 by a massive degree. 1% per month is what the S&P averages. So that is the benchmark. That is the benchmark for you as a trader to beat the S&P 500. If you have money-making aspirations, if you have money managing aspirations, you need to be able to consistently year over year beat the S&P 500. My monthly returns changes. So like I would need an exact specified time to answer that question. And then I would have to call my guy and let him do the math. I'm staring at a position right now that says that the return on investment is 108%. Right? So I mean, I don't know. I don't know what. Shoot for 4% per month. Shoot for that. See if you can do that on average. If you can, every single month, there's 12 months in a year, man. If you can do 4% per month, the returns are, you're going to be up in the 30s and the 40s, 40-50% on the year. That means you're going to be massive traders. There's one guy right now that everybody was talking about. He made over 150% last year. And he did that on billions of dollars. Right? I can't remember the size of his portfolio, but he runs a hedge fund. He runs a fund. And he made over 150% last year. As of right now, I don't know of any other trader, Ray Dalio or anybody that beat that. Not public knowledge anyways. 150%. I beat it, but the amount of money that I have on, on my books is nowhere close to what he's got. So kudos to him. He absolutely crushed it last year. That's massive, man. The amount of money that he made is insane. That's not all his money. That's, all the people that give him money to invest for him. So he gets paid bonuses and fees. He's on a fee-based structure and all that. He made an absolute killing last year. So his family probably had a very nice Christmas this year. They probably went on the yacht for a couple weeks. The good life. Yeah. Just try to beat the benchmark. The benchmark is the S&P. Obviously, with the S&P being down on the year, you definitely want to be able to beat it. Inside, outside trending candles talk. Very helpful. Other question, if okay. When you refer to intraday resistance, are you referring to the closest weekly daily hourly? The highest hourly close or the lowest hourly close would be support. So like intraday resistance today would have been here. Let me do this on a clean chart. All right, so first off, you got to find your intraday. Well, I can't on this one. Let me go. Here, let's just use Bitcoin. All right, it's easy. Intraday resistance. So where's the daily open? It's this candle there. Where is your highest closing hourly candle to the upside? Your highest closing bullish candle there. That is intraday resistance. This is your daily open. So at this point in time, when this candle was made, this was intraday support. Right? Because remember, time is moving forward. These candlesticks represent where price went in that given time frame. So this would have been intraday resistance. This was yesterday's intraday resistance. Each day it changes and you move forward. So that would have been intraday res. This intraday support. There's the breakdown. So this line would then shift to there. Ultimately, you got another breakdown there, and then that was the end of the breakdown. So that brings your intraday support to there. And then you broke down here. The market literally was trending lower. Typically, on those days, you're looking for short side entries, but you got to make sure you take profits at these areas because this could happen. You could get a reversal. It's called random market violence. So, this is why we are typically aiming for these areas. That's typically why they will be support, like they will be our profit taking areas. So, like, with this resistance being higher than this one, and then getting this move, typically on a retest of this candle, I would have been looking for a short, and I would have been targeting that as my profit taking area. This is also known as a trading range, an operating range, where we as intraday operators are looking for entries. Sometimes you get them right, sometimes you don't. Today's all muddied up. You know what I mean, with the way the price action was. But it did look like it was looking lower, right? And since the S&P 500 is still bearish on the day by a whole percent, Bitcoin is still bearish on the day. Even though you had these two nice candles here, you're still red on the day. That's important information. This is your open. That means this is the high of day. So you almost went up and made a fresh daily high, which is an area to look for potential shorts. If you have a negative bias, if you have a short side bias. There's a nice big fast supply zone up there as well, right there. A spike up into that, I would definitely be looking to take profits because the market could push up into that and then roll right back over. So here's resistance. That's yesterday. Today's resistance would have been here. Intraday resistance. Until you get a hourly close above it. There, boom. Then resistance is broken. Now that became resistance. And then I want you to notice this right here. Upon this candle's open, broke out above resistance. Here. Bearish engulfing. Look at this wick. Boom. At 8 a.m. That would have been a flawless short entry. Flawless. Would have been the best entry on the day. And it works a lot better when that's lined up next to a daily res, but same scenario, no matter the time frame. But we basically only care about the daily levels. We want to look for intraday resistance and support levels as close to your daily levels as possible. Those are the ones that are going to provide better opportunities. Typically. Not always, but typically. Those are the areas where I love to take those entries. That's why on Bitcoin yesterday, or the day before yesterday, when the guy was like, "So where's the live trading?" Being a smart aleck. Because the live trading happened the first 5 minutes of the stream. We get in, we get out, man. We make money quick. We get in, we get out. The rest of the time, I'm answering questions and going over strategy because that's what people want to know. They want a strategy because they see this and they want to be able to do it. And I don't blame them. That's what the rest of the time is spent doing. But I told him when we were going up into this, if you wanted to short it based on the weekly supply, watch, the daily close. Watch resistance right here on this day. We were on this day, Tuesday. I was like, if you continue lower and you close down in here somewhere, watch for a retest of 16,669. As any push back up into that could be an opportunity to get short. But you didn't close bearish. You didn't close down in here. You closed above the previous day's resistance. That's bullish. That's bullish. That means on Wednesday, you should have been looking for bullish entries. The only place that gave you an entry was there. On this day, you the only place you could have had an entry was here at the open. So just mark your daily opens and your daily closes and then go into your intraday time frame charts and use your bar replay. All right. So that's wrong for whatever reason, but okay. That's the open. How does it play around it? Boom, right there. That's nice. Looks good. So if you can tell by this move right here that people were what? They were shorting this. They were shorting it. This was the breakout. This candle is what stopped everybody out. They were getting short based off of this move lower. This was my entry here. I got long on this. On this move lower. Right? So people were shorting right here. This candle stopped them out. And so many people were shorting right there. Look how big of a short squeeze you got. I mean, Jesus. That's from short positions closing. Boom, boom, boom. That's the expansion that you're looking for, that you're trying to get into. You didn't have but a brief second. And this didn't, this gave you a very quick opportunity. So let's play one. Stop it. there. That created support. There's resistance. So you have your daily res, intraday resistance. How price is reacting to that. Fresh daily high, bearish rejection. We probably would have shorted it if we didn't have a bullish bias. But this is what it looks like here. I'm just curious if it gives you any entry. Now what we want to see is a retest of this price. Nope. Couldn't have played it. It would not have worked. You did not get a retest of it. It just broke right through it. That would have been a difficult one to take. There wouldn't have been a trade that we would have taken. Just would not have been. But those aggressive moves higher are usually when people are getting liquidated. When usually people are on the wrong side of the market. And that's what we're trying to do, right? Is find a daily bias. Everybody's always looking for a daily bias. And there's so many videos out there how to get a daily bias. I watched the Inner Circle Trader video on that exact, that's the title of the video. That video was like an hour and a half, and the dude never, ever, ever answered the question in the entire video. And he gets hundreds of thousands of views. He never answered the freaking question. I don't know how he does it. Never answered the question. The best way is to follow the last 3 days, right? What have you been doing? You've been moving higher, right? Is that going to always be right? No. 1 day, 2 day, 3 day, you've been moving higher. So looking for longs on this day, you got stopped out. Okay? Nothing works 100% of the time in trading. This is why we have to use stop losses. But, we also combine that with other things. Other things. The longer you do it, the better at it you're going to get. There's daily res. There's a close above. So we would be looking for bullish entries on this day. But look where the open is. The open on this day was higher than the resistance. That's a problem if you're looking for bullish entries. It's a problem. This is your open. This is the daily res that we would be looking for, longs. But here's your open. I guess one could have been looking for entries here at support. Long entries. But you opened higher than resistance. So that's not really what you want to see. You want to see an open under resistance because you want to target resistance. If you open above resistance, that that could mean something very bad because you're trading under your open for that day. Boom, boom. Look at that right there. That's a stop out. That's a stop out. But look at what happened next. See, we're typically looking for supply, which would be there for retest entry shorts on the next day, not this day. But you didn't get a full-on test of supply. But let's see what does happen. There's the previous day's low. Look at, hang on though, because, yeah, we haven't, this was the open. Watch this. Look at this. Daily supply. Look at this. That is our trade. Right there. And that happened at 10 o'clock in the morning. Daily supply. Look at that. You don't get no better. I didn't think that it tested supply intraday. I thought it only tested here. Right there. It didn't even test it. It came back up close to it, but didn't get it. But this is the supply. That is the daily supply price. Right there. And at 10 o'clock in the morning, boom. So on this day, we would have been looking for that opportunity. But you got a beautiful entry on this day at daily supply once you broke down. You see what I'm saying? Once you broke down, you had a flawless entry for the expansion lower. We're just trying to do that day in and day out. There's nothing to go by here for us. The only thing that we currently have is old support. That's it. And like I said, Tony is the one that found this level. I wasn't even focused on it. I was focused on the weekly supply zone and weekly resistance. Mark your lines, please, with whatever terms that you're going to know what means. WR means weekly resistance. This would be weekly supply or support. And it is old support. The support candle is here. Right? Those are the two prices that I was focused on and the yearly open. So I hadn't even paid attention to this. But he did, because he specifically targeted that day. It was support for multiple days until you broke down there. That's fantastic, because that means he is learning. At least he knows where to start looking for stuff. resistance, resistance. Today, so far, it's acting as support. So far, looks pretty damn good. I had some, oh yeah, read that one. Weekly res 17.1-ish. Yeah, we're a ways off from that. Where are we looking to go on the upside? Well, wicks are targets. You've already taken out last week's high. So if I was wanting the market to continue higher, which I am, ultimately that would be putting my next target up there. But remember, we would be finding intraday resistance to, or since this is a weekly chart, even daily resistance pretty close to this level for profit target. But I'm not looking for that to happen today, right? You can't ever expect a big target like that. If you're operating on a weekly time frame or a monthly time frame, you can't expect it to happen. You can only expect price to move inside of your operating range. So you can clearly see the operating range here and here, right? Minus Tony's level there. See how the candle bodies are closing inside of these two prices? That's where people are taking trades. You can only be a buyer here and you can only be a seller there. It doesn't matter if you're a short seller or if you're looking to buy the market. There's only two different directional bias trades to take. Either you're a short or you're a long. But either way, in both cases, these are your areas of operation. So if you have a bearish bias, you are looking for shorts where? Well, here. As close to here as possible. And where are you looking to take profits? Here. There it is. Your short trade. There. Here is where you take profits. There. From there to there is your operating range. This is all you can expect. Anything outside of it is just icing on the cake. So like if you get lucky and you get downside continuation, then yay. But you never expect that. You can't. You can only expect this. So if you would have bought this, you would have been expecting this. Unfortunately, you didn't get it. You got stopped out instead. Right? Now your profit target's hit. A perfect example of a trap right here. Breaks down, looks like a legit breakdown. Let's get short here because that's intraday supply. But what do I always tell you? You get an hourly close inside of it, you leave it alone because it could be indicating that it's going higher. You closed inside of it. So you would not have been taking this short. would not have been taking this short. And good thing you didn't. But others did. Others did. And they got hurt. We're about to make another fresh daily high. So just operate inside of your operating ranges, please. These candles do this because of bots and algos, guys. Bots and algos are triggering here. Boom, 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 boom. This is a dealing range. That's why it forms like this. That's why it looks like that. This is what people want to see when they take short entries and long entries. They want to see that upside continuation. But when the market's choppy, which it usually is, you don't typically get it. So by lowering your expectations, you'll be much better off. But there we go. Fresh high of day on Bitcoin. Let me see here. Where is 846? Right there. Today, 8:46 a.m. What I am doing is I am going to buy it on the smaller account. It will fill me lower than the support, but put me back in with a full size position because I had already been in the trade from earlier on in the week. That was today at 8:46 a.m. That was here. This is where I was being a buyer. And then here's a fresh daily high. Taking profits, baby. Booking gains. Booking gains. Do that continuously and multiple times per week, every single week, week after week, month after month. That's the goal. Tony the Fish for president. Yeah, that was a fantastic call out. I mean, beautiful, lovely. It was his find. I wasn't even paying attention to it. I was only looking at the higher time frame levels. You are back to being green on the day, and you are trading currently above daily resistance. Lovely. Lovely stuff, man. This is a perfect example of support acting, or of support becoming support again. Acted as resistance there. Here's your breakout. There's the retest. Upsy daisy. Tony the Fish. Good find, brother. Keep it up. Keep it up, my friend. You're doing fantastic. Weekly red 17. Yeah. Regarding the spot long-term buy or position trade, do you think there is a strategy to help prevent perfection being the enemy? Like when trying to position swing trade USD initial long last year. All right. Not really. I mean, I don't. Here's the problem, man. Nobody likes losing money, right? But waiting on perfection, like you have to be able to, we discussed this yesterday, is to identify what a perfect opportunity even looks like. So, what may be a perfect opportunity to me might not look like a perfect opportunity to some. And only a couple times a year, for instance, I might get that perfect opportunity, right? We never know if it is a perfect opportunity until time passes. So, I mean, let that sit in your head for a little while. Like, if the US dollar continues lower, then my entry on that short trade will be the perfect entry and opportunity. The problem is how in the hell would you know how to identify that? So being able to identify a perfect opportunity it's a difficult thing to do entirely. Waiting on perfection before taking the entry and missing a trade. Here's my answer. It's a long-winded way of just saying I would rather close out the year neutral than negative. So if I miss a trade and I don't lose any money, then that is better than losing money. I'll take that any day of the week. Right? I'm not quite sure what you're getting at. I do realize that we missed that long trade and we were ready for it. We were primed for it. We were talking about getting long USD long before anybody else was because we knew the Japanese yen was going to stay under negative interest rates, and we knew the US dollar was going to be hiking interest rates, rising interest rates. So we knew that we wanted to be long the USD based on the carry trade alone for the separation of interest, right? That's going to be able to generate alpha just by sitting in the position, even if it goes sideways. You can make money on the interest rate hikes alone. But we missed it. It's because we never got, or I could never identify what I thought was the perfect opportunity to get into the position. So yeah, you're gonna miss trades. There is not a strategy alive that will allow you to catch every opportunity. You're going to miss them. It's going to happen. If you try to catch the perfect opportunity all the time, you're going to find yourself eating a shitload of stops. So it's almost I really can't even answer that. It's almost like you just gotta weigh out the pros and cons. If you miss it to the upside, then maybe you can catch it back to the downside, because nothing goes in one direction forever. There's always a pullback eventually. You can get in then. There wasn't many perfect opportunities on it to the upside. But it is a beautiful trade that we missed. What he's talking about is a long time ago we were looking for longs over here, because we knew that they were going to be hiking interest rates. And we even had a trend line drawn on the chart, something like this. I can't remember exactly what it was. All right, something. Oh, I mean, right in here's where we should have been looking. This is where we should have been focused. I mean, in hindsight, it is what it is in hindsight. We should have just been looking at the RSI and saying, well, shit, I screwed that all up. There was the perfect opportunity. On this day here. Didn't quite test, but at that point you had already broken out above the 50, so you do have permission to look for longs. On this day, you would have been back under the 21 on the exponential. So my strategy would have told you to probably wait for it to get above. But my strategy also would say, as long as you're not closing dailies under 103.511, I think you can look for longs. Right? We just, whatever happened, we missed this right there. That's what we missed. It's impossible to catch them all. Because even then, we know that this setup worked out in hindsight, but you know how many times I've been looking at this chart and how many times I've taken that entry to then the next day be freaking stopped out. You know how many times we've seen this? You know what I'm saying? We knew what we were looking for. And damn, did we miss it. I mean, it was definitely one of the best opportunities of many lifetimes. Yeah, and then this thing traded sideways for a solid year. It is what it is. There's no use crying over spilled milk. All of that. So from 103 would have been a bullish entry. I mean, 150. And there's no way to know that that was going to end up happening. I mean, we could have assumed it would more than likely eventually happen, but this is the 2020 pandemic. Yeah, there's really nothing that yeah, you're gonna miss opportunities. The only thing that I can say is just try to do better. Use the bar replay, build a strategy that will help you to identify those opportunities quicker. Identifying opportunities is hard for most everybody to do. Back to red on the day. Always take profits, guys. Always take profits. Now you made a new daily high. This thing can roll right over. What's the S&P 500 doing? It's continuing lower. Definitely take profits. If you want to short that, be my guest. Manage your risk off the high day. Last week's low. I don't think it's going to make it there, but we'll see. We don't have a bearish bias, so I can't short something that I don't think is going lower. um Yeah, that guy also made that 150% return, basically shorting bonds on interest rate cycles. So simple, it's ridiculous. I know. Typically, that's where you're going to find the best positions, the best strategies. Simple. Keep it simple. I'm looking, basically hoping at buying a Q1 low. Of what? USD JPY? Then buy it. You've had 3 days. But I would wait on a support. That's just me. I don't know how you want to do it. I don't know why. I mean, I know why, because it's still a good carry trade position to the upside. Right? The USD JPY, nothing has changed fundamentally. Nothing has changed fundamentally on this because the US dollar's interest rates are still rising and the Japanese yen is still staying under negative. The reason I took the short when I took the short is because we knew that they were going to intervene. We knew they were going to be selling dollars and propping up their currency. We knew there was manipulation going to happen, and it happened. But this may not be the position. It may not stay this way. What I am betting on, if you will, is that capital will rotate out of the dollar and go back into riskier assets once the inflation starts to come off more. Because then they know that the interest rate will stop being risen. And there will come a time when the interest rate starts to come off again. And that's going to be, hopefully we don't make fresh highs before that happens. Me taking that short was based solely on that. But fundamentally right now, it still smells like a good long trade. You hit oversold levels on the daily, not quite yet on the weekly. I don't know that you will hit oversold levels on the weekly. But it's not a buy yet. You're still a sell. It's not a buy yet until you get into bullish territory. You should have bought on Monday. The market was open. You should have bought the close on Monday. You would have been stopped out on Tuesday, depending on where you had your stop. But if you're buying a spot long position, then it doesn't matter. You don't need a stop. You know this isn't going to zero. I don't even know that this is the asset you're talking about. You could be talking about Bitcoin, spot long Bitcoin position. Sometimes just buying the damn day is a good idea. You know what I mean? Happy New Year, December 31. What's the very next day? New Year. Might do something crazy and buy some more Bitcoin on the first day of the new year. Why? Just because it's the first day of the new year. Bought it on this day. And look where we're at now. So it doesn't mean I'm going to be right long term. But as of right now, I have bought Q1's low. Just by buying on that day, right? Just by buying on that day. I bought Q1's low. I bought last last quarter's close. It's a decent position. I'll hold it until it either gets stopped out or whatever. I find it so hard to take profit. Everybody does. It's part of the cycle that everybody goes through. It's the mentality of it. It's called greed. Every human being has greed inside of their body. It's a trait that you are born with. There's reasons why. It just depends on who you ask. You will get a different answer. But even the Christians and the scientists all believe the same thing, that every single human being has the trait of greed within them. The Christians say that the reason you are greedy is because Eve took a bite of an apple. I don't know why the scientists say that you are greedy, but they do. People are just greedy, man. People are sinful in nature. And that greed is what will cause you to set hoping and praying that you're going to make more and more and more. No, you can't do that because you're going to lose it all. You need to remind yourself of all the times that you did set in the position and then watched all your unrealized P&L turn right back into a loss. You have to physically remind yourself of that. Or force yourself to take profits. This is why most profitable strategies consist of rules. And you must follow those rules. Because if you don't, then it doesn't work. You got to pay yourself. You got to get out of that mindset of I want to buy the low. Everybody wants to buy the low. I don't know that that's even going to be the low of the year or the low of the quarter. It just happens to be right this second. It doesn't mean it will be by next Friday. Next Friday we could have fresh yearly lows. We could take out 2022's low, right? It's just greed. If you get in a winning position, you already need to have a take profit. You need to abide by the rules. If you do not abide by the rules, the chances of you being successful at this are slim to zero. We cannot see into the future, therefore you cannot hold on to it. Push your winners is one of the, if you're going to push your winner, you need to have a strategy in place to where you're not risking a shitload of money to do it. Right? The best way that I've found to push my winners is to take profits, shrink the position into a small position, and then allow that thing to run. Because at that point, I no longer have any risk on the table whatsoever other than the unrealized P&L. But since I've already paid myself for the trade, I know going into Friday that even if I don't take not one more trade, I will be green on the end of the week. You see what I'm saying? It is as easy as that. Then you can push that winner. Then you can push the winner. But you cannot buy an asset with max leverage and just sit in it and hope that it's going to continue to go, because in my experience, that's not how the market works. The market chops around sideways and takes out old swing lows and takes out old swing highs. The only way to do that is to not have a stop. And if you go into the market with any leverage at all without a stop, you will end up losing the entire account. It is a fact. It will happen. Eventually, you will blow it. Unless you get extremely lucky. And I'm talking like you're looking at odds of winning the lottery almost by leaving a position levered up to the max open for years and collect Could you just imagine how much money that would be? It might start off small, but once it starts to move up in the thousands and each $1,000 it moves up, that leverage is going to just make it bigger and bigger and bigger. It's going to end up growing insane amount. But at the same time, like, very few people are successful in doing that. I built what I thought would help others, what helped me do it, right? So therefore, you got to keep those rules in place. Otherwise, you will not make money doing it. If you were already profitable as a profitable trader, you would not be surfing the internet looking for trading websites or trading YouTube videos. I mean, that's why I don't know many. Most of the people that I know are the people that's been referred to me by you guys. Have you heard of this guy? No. Check him out. Okay, I do. I did. Now I know him. Well, I don't know him personally, but I've checked him out. What do you think? Well, I don't know. It's easy to say one thing. It's hard to prove anything else. There are every single person on Twitter and every single person on YouTube are acting like they are successful. Every one of them. When statistically we know that, at least according to IG and Capital.com's very public data, over 78% of their clients lose money. So if you apply that stat across the board, then at least 79% of the YouTubers are losing money. And 79% of your Twitter followers or the people that you follow on Twitter, they are losing money trading. But they are acting like traders for whatever reason. Statistically, that's how statistics work. You apply them across the board. If they have a trading account, then they are in that statistic. That's why I say there are several of them that you follow that probably don't have 1 single cent in Bitcoin. Not 1 penny of their money is actually in the asset they are giving you advice on. Because they are making their money from you or from ad revenue or from whatever. They are not making their money from trading. You take you away from them, then they must go find a job. 79%. It's a very harsh industry. It's difficult. It's going to take work. The way Bitcoin seeks liquidity and fakes out, I don't think we will get that entry on a daily to perfection. No, we've done it. I mean, so many times, bro. So many times. We did it today. We did it today. What do you mean? It happened today. Will this position stay open? Will it get stopped out in the future? Yeah, sure, it's possible. But it does happen. Right? It does happen. This entry, remember, I took this long right here. I waited for this wick. I bought this wick. Remember? It does happen. Will it be stopped out in the future? Potentially. But we can't that's neither here nor there. We can protect that position. We could take profits, move the stop to break even. And then if it doesn't, then yeah, you will look like, the king trader. The same goes for USDJPY position. Yeah. If this thing comes back all the way up here and stops us out, then hey, it happens. But if it doesn't, if it never comes back up there, that's stuff that's outside of you, what you can even control. I wouldn't even be concerned about that. All you need to concern yourself with is getting a consistent hit rate on your trade entries. That's it. That is it. If you want to be an investor, you just buy it cheap. But investors are not using leverage. They are just putting their money into asset and letting the natural growth of the asset grow their money with it, right? Over time. They're not using leverage. And if they are, it is a very minuscule amount. But we have seen positions run for a long time before. I can't show you that entry because I screwed that up. What I did today is the same thing I did on that accidentally. So I no longer have that long from down there, unfortunately. But I still have the short on the USDJPY. And the only real reason why I'm even leaving it there is because of how it looks. It is just a flex. That is all it is. In a sideways market, that capital will be better put to use by deploying it to an asset that is trending, not moving sideways. There's an opportunity cost to sit in a sideways asset with any amount of money. So it's just a flex. All right, let's go ahead and get this thing wrapped up. We've been going for 2 hours, and now we can see that, pretty much this thing's already done its due diligence on the day. Still got plenty of day left. Tesla going right back down again, but it's at support again. Right now, Tesla is testing daily support. But it is trending lower. Each time it bounces, it gets sold off. So who knows? The year may open up very bearish. You start hearing a lot more talks on inflation, or not inflationary pressures anymore. Now you're starting to hear talks of a recession, and that's going to be negative for the market. The marketplace is going to take that negative. Ultimately, one of these days, though, eventually this bear market will come to an end, and we will be positioned for it to happen. All right. The difference strat buying a 2-week, monthly, quarter, even yearly, just say 13.8 or 13.250 or something, or this yearly open retest later in the year. Yeah, could do it that way. Yeah, I got you. Yeah, you could do that. You could just wait. Maybe you get a retest of the daily or of the yearly open in Q2. Remember, we discussed that on USD CAD yesterday. I'll pull up USD CAD and I'll show you that, and then we'll close it down. USD CAD did the same thing, right? Last year, 2022, right? You have a massive operating range here on the quarterly. And then we had support. Support. Here's Q1 2022. There is your yearly opening range. So inside of Q1, you closed bearish. Let's see what that looks like on the weekly. All right. This was quarterly support. And then look what happened on the first day of Q4. Q2. The very first day of Q2. This is Q3's end, Q1's end, Q2's beginning. Very first day, Q2's beginning. Quarterly support. Buy it. Store it. Right here. So it can happen, man. It can happen. The trade on Bitcoin might not even be a buy until Q2. We don't know what's going to happen in the future. That's why, like I said, if you listen to Bloomberg, CNBC, most of those guys aren't even giving you any opinions until Q2. Let's wait until Q2, see where we're at. I think we'll know more in Q2. Q2, we'll know more. Blah, blah, blah. Q2. Right? Because they want to see how the market reacts in the first quarter. But at least we know what to look for, right? You know that for a fact. This is one of the best channels to be looking for. Position trades, day trades, weekly entries, monthly, whatever you're looking for, you can find it here. Because that's what I am. I am a trader and I do it every single day. I am looking at all charts, all time frames, all everything. I miss some things, but we catch a lot. So we'll catch it. We will catch it eventually. You guys have a fantastic day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.